some in your life.
Hey, financial freedom seekers. How's everybody doing? Welcome to 2023. Today is the first live broadcast followed by an AMA of 2023. But I've also been pushing out some content all this week on my YouTube channel as part of my morning workout routines. So the first bit of content I released was how to make 2023 the best financial year. The reason that I did that is because I'm going to be covering a whole ton of shit. And we've got piles and piles of shit coming through in 2023, unfortunately. And so I wanted to frame it from the context of how you can make 2023 the best financial year for you. So do go back to that video if you haven't seen that one yet after this. Today, we're going to be discussing the next pile of shit that's coming through, which is probably Silvergate. So this week I covered the digital currency group and some of its subsidiaries, GBTC and Genesis, and then some of the other companies that were affected by that, Gemini. If you want to go into the long form content, it's on my YouTube channel where a group of us all dug deep into all the contagion that's happening there. And if we don't see anything in the next couple of weeks in terms of significant funding into digital currency group, then I'm going to be assuming the worst, which means that there is likely a big hole that can't be filled, and that will have further contagion, unfortunately. But today I'm going to be discussing at the end of the Twitter space, we went a bit deeper into Silvergate. So I said that I would study a bit more about the balance sheet. It's a public company, so the information is available because the share price has performed like your average altcoin recently since we've had the contagion in the market. That does produce not financial advice, and I'm not going to be able to, as it's a public company, need to be very careful that you don't trade on the back of any of this, but it has produced a distress scenario in terms of its market cap relative to maybe its future potential, but let's look into whether it might be the next domino to fall. So before we do that, it's important to understand the difference between the different types of banks, because this will become very relevant when it comes to discussing stable coins and other things. And so looking at Silvergate, it is broken down into two types of banks. Silvergate operates as a fractional reserve bank as opposed to a trust bank. Now, a trust bank is a simple business model. It really acts similar to a stable coin. And so a stable coin really takes, people deposit dollars at a bank. It issues a digital token, a digital representation, and then it goes out and purchases products in the money market. The money market consists of low risk, debt instruments like treasuries, various other money market instruments, commercial paper, and various other things. And the beauty of it is it takes away the credit risk from the banking system and over to the financial product that it invests into. So for example, if it takes your dollars and then invests it into treasuries, then rather than being exposed to the banking system, you're exposed to the credit rating of the US government. Because all banks systemically don't have the funds, and fractional reserve banks, it creates money every time they issue a loan. And so therefore it adds, risk of the banking system, which came to its climax, as we saw in 2008, leading to the creation of Bitcoin. But a trust bank simply takes deposits and invests it in money market instruments, and it has a very low risk conservative model. The interesting thing about a trust bank as well is that because those funds are segregated outside of the banking system, then they tend to hold those funds in trust. Now, an example of that that's very real to the crypto market, and remember, none of this is financial advice or legal advice, is Deltec Bank and Trust, for example. So Deltec is in the news at the moment due to the fact that it is the bank behind Tether and is one of the major banks that has been servicing the crypto market. When you compare that to Silvergate, Silvergate is a US regulated, registered with the Federal Reserve, and therefore it has a different types of risk because that is a fractional reserve bank. And with a fractional reserve bank, it can invest in lots of different types of loans. And so traditionally, fractional reserve banks, some of the banks that I look at, about 40% of their balance sheet tends to invest in real estate. So it takes additional risks in order to get additional returns, and it can also lever up, and it has a much different level of stress testing and scrutiny that it has to go through because of the additional risks that it's taking. If you want to look at the very bottom of the maximum type of risk, it was the illegal banks like Celsius, for example. So Celsius is now, the founder that created it said it was safer than a bank, but it doesn't have any of the risk models in terms of the financial products that it was investing into, and it doesn't have any of the insurance or ability to get bailed out like a fractional reserve bank had to. So if you go across those different risk spectrums, you've got Celsius, BlockFi, Genesis, Gemini, which are all essentially illegal banks when they operated from a place of insolvency, versus, or whether they were securities businesses if they don't operate from a place of insolvency, because they were pooling together people's money. And you either have a banking license to do that, or you sell it under full disclosure of the different types of securities that you're investing in. So a bank actually removes the ability to disclose the risky types of securities you're investing in, but it has all of the different protections of a fractional reserve bank or a trust bank. A trust bank tends to invest in low-risk money market instruments, but a fractional reserve bank tends to invest in commercial loans, real estate and property, and therefore it has stress testing, reserve requirements, and it also can become a member in the US of FDIC. FDIC is an insurance scheme the banks contribute to, and it insures approximately 1% of deposits in the bank system. So what we saw in 2008 was when you go beyond that 1% of FDIC insurance, the government tends to step in to prevent what's known as a bailout. So a bail-in, it prevents. A bailout is when we all pay for it through taxpayers. We create a cost of living crisis. We create inflation. They try and mask it so that to prevent you using your deposits by money printing, quantitative easing, taxpayers' money, and it just kind of delays the gratification and delays the risk, because they don't want to do a bail-in, which is essentially where you haircut people's money, you issue them some equity, or you just simply haircut people and say your deposit is gone, and you make them an unsecured creditor, or as what it may be, as what it is in the current illegal banks that we're operating, like Celsius. Now, the good news this week is that we've started to see lots of progress in terms of where that goes. Well, firstly, in the Celsius case, before we get back into Silvergate, it was ruled that because of the terms and conditions, the funds held that belong to us were actually belonging to Celsius, and therefore the New York Attorney General is suing Alex Majinsky, who told us that the funds belong to us, even though their terms and conditions said that it was safer in a bank and our funds are actually held more like a custody relationship. And they didn't have the securities licenses or banking licenses in order to do that, and this led to a big chunk of the money being missed. And so therefore this illegal fraud is being looked at by the New York Attorney General. But we need to make sure that New York isn't stealing all of our money as creditors, and that it's actually distributed to everybody, not just the 23,000 or whatever they said customers in New York. Anyway, digress, but it all becomes relevant because of this ownership structure and the difference between a trust bank, a fractional reserve bank, and an illegal bank. Okay, So if you look at Silvergate, now let's jump into Silvergate specifically. Because it's a public company, we know a lot of information about it. You get that additional transparency when a company is floated on a stock market. So I looked a little bit deeper into, so it was originally a traditional bank that approximately in 2013 decided to get in early to start servicing financial technology companies, more fintech, and then eventually got into servicing the Bitcoin sector, which is great. But the largest segment of Silvergate's loans are commercial real estate, obviously a massively declining trend as a result of the pandemic, where more and more people are working from home. And so therefore commercial real estate has been on a losing trend. And then also traditional real estate for, what have we got on here? 1 to 4 bed, family loans to real estate. So that's their biggest segment of loans. In order to make those loans, you need to meet the Basel requirements. And the Basel requirements, for example, states that you have to have more deposits the more loans that you issue out. And so therefore you need to meet those deposits in order to meet those loans. One of the challenges is a lot of those deposits were coming from servicing Bitcoin and cryptocurrency exchanges and in the market. So when we've been going through our whole not your keens, not your coins, and people have been looking at getting their money out of exchanges, that has obviously led to a massive exodus away from people either converting their cryptocurrency into dollars and then withdrawing those. And if that cryptocurrency exchange was using Silvergate as the back end, because they're a technology-led bank as well, they built out their whole API structure so that exchanges can build on top of the bank, and they were all able to interconnect and settle between each other. Then obviously your deposits start to go down. Now, what if you've got distress in the traditional real estate market at the same time, due to the fact that interest rates are going up? So what happens when you put interest rates up? Well, remember the debt-based Ponzi scheme that I call fiat currency. The business cycle works around people being encouraged to go into debt by putting interest rates down so that they borrow more mortgages from traditional fractional reserve banks, so that then more money is created that pumps up the business cycle. And then this bogey called inflation, that if you do too much at its extreme, leads to the central bank wanting to increase those interest rates so they can send those that took out the mortgage bankrupt. They can either extort more money out in order to cool down the economy, so you service more money on your mortgage, and spend less money in the economy, which then pushes down the prices. Or they go bankrupt and then the money disappears from the economy, which has a deflationary effect leading to a recession. That's essentially what the central bank wants to do: get you into debt to increase the business cycle, and then take you out of debt by sending you bankrupt to cool down inflation. That's how we run the debt-based Ponzi scheme called fiat currency. We need fractional reserve banks to do that. And when it all goes wrong, you just simply print up a central bank digital currency if there's no appetite to bail out those banks, or you can't do a bail-in like they did in Europe in the 13 Greek crisis. And so if there's no appetite to do that because of all this wealth inequality, rich-poor divide, people complaining that they're not spending money on them because they're shafted by the system, you end up with a CBDC probably being the final bailout and a deleverage of the system. And I talked about that in previous videos and the impact that that has on your privacy and freedoms in general. So if FDIC can't pay out in that time of stress, then you need to sell some more securities in order to get yourself in a stronger position to prevent essentially a bank run on that. So let's go a little bit deeper into the background of Silvergate and the cycle it has been through. So firstly, one of its early investors in Silvergate was none other than Digital Currency Group. Digital currency group I covered in my video yesterday when I covered two different videos, one on GBTC, the other on investigating digital currency group. So Barry Silbert and Digital Currency Group was an early investor in Silvergate, and one of their first financial technology companies when they pivoted from traditional banking to digital fintech banking was Second Market. And Second Market was created by Barry Silbert. It was later sold as NASDAQ Private Markets around about 2013. Now, fast forward, they grew and they started to serve our industry, which is great because it's very hard to get banking in our industry. So you had the fractional reserve bank that would serve the Bitcoin and crypto market, put together a robust compliance structure and really support with the technology and access to banking using FDIC insured banks. In 2019, they IPO'd at a price of approximately $12. And as our industry grew, they did 1,000x, over 1,000x, where they went to a peak of about $222 as their all-time high from the IPO. Since FTX's announcement and the contagion in the market, they're now back down to approximately $12 now. So it's had a massive correction through the cycle. And it's back down to $12 and a significantly lower market cap. A few of the bad investments that they made along the way, some of them have to be written off in the last balance sheet. One of them was, remember when Facebook wanted to create their own stablecoin? Well, they created a project called Libra. It led to massive controversy, a US Senate hearing asking them all sorts of questions. They pivoted away to a new project where they were launching a token called DM, something like that, DM. And now they've written off the whole 196 million that they invested in that project as Facebook offloaded the thing to them after the US government really decided that they don't want Facebook to get into the cryptocurrency and stablecoin business. Now at their peak, they served approximately 1,300 digital currency types of business, which range from fintech customers to exchanges, and many of the portfolio companies that we've serviced at Bank to the Future that I've personally invested in as well. For example, Kraken, Coinbase, Gemini, Genesis, Stamp. So full disclosure, I was a shareholder in Bitstamp, Coinbase, Kraken, and Gemini is actually Genesis is a subsidiary of Digital Currency Group, and Gemini, which was created by the Winklevoss twins, built their lending earn product on top of Genesis, and Genesis made some really bad loans, including lending a bunch of money to its parent company, Digital Currency Group, and then making pumping up the price of their own product. Which, the GBTC, and I won't cover that because I covered that in my previous videos and you can check those out if you want to do it, which is going through a shareholder buyout and a shareholder lobbying scheme at the moment to try and work through either a takeover, reducing its fees, or actually allowing for redemptions into Bitcoin due to its 50% discount as a result of this distress right now. Okay, but who else does Silvergate serve? Well, many of the stable coins, these are the ones that were created by Circle and Coinbase, like USDC and TUSD as well. Paxful, they use Silvergate as their banking, which is the technology behind BUSD, Binance's stablecoin. Also Gemini US dollars. So that's pretty much the entire stablecoin ecosystem with the exception of Tether. Now, Tether uses Deltec Bank, which is a trust bank. So now you start to understand that although Tether and Deltec get most of the exposure, there is also risk and inherent risk in the US side as well, which is why I've always diversified there as well, not just saying get back into USDC because Tether doesn't have the different risks. Being regulated inside the US poses a different risk to those that are outside the US, as well. So these are different types of risks that need to be managed, as I've always said. But Silvergate is the bank behind those ones. Also, some of the venture capitalists in our scene, like Polychain Capital and Block Tower, which also, tend to have lots of exposure to these different digital tokens and part of the ecosystem that has all significantly imploded since Luna and FTX as well. And then other diversification like microfinance companies like Kiva, awesome company, where you can contribute micro money, to entrepreneurs in various other, small amounts of money that makes difference in very micro businesses in developing countries. Another thing that they're behind as well is some level of Bitcoin collateralized loans. So one of their larger, more publicly facing customers is MicroStrategy, Michael Saylor of looking after the Bitcoin strategy of MicroStrategy, which is a publicly traded company. They can use their Bitcoin as collateral, like I was doing with Celsius. That led to me becoming the 21st largest creditor at Celsius. It's not that I stored my Bitcoin with Celsius. It's that I was a shareholder in Celsius, and I take a small percentage of my wealth, and rather than selling Bitcoin, which I hold in cold storage where I own a private key, I would take a percentage of it into my risk bucket, go back to the 2023 how to make 2023 the best financial year to understand my bucket allocations. I would take a small percentage of it so that I don't need to sell Bitcoin, and I can take out a loan against it, and then I had more Bitcoin that would pay for the loan. And then obviously we know all the fraud that happened that the New York Attorney General is suing, and they put themselves in Chapter 11 protection to protect themselves from creditors like me having the ability, and then they say they own our money, and then we have to come after the CEO outside of Chapter 11 protection and everything that comes from that, as the case that I've covered very frequently. But Silvergate also did some of that, so they had some Bitcoin collateralized loans. Hopefully, they weren't doing the shenanigans of under-collateralizing institutions and over-collateralizing retail. I don't think they would be doing that. But hopefully these are all, over-collateralized loans, which means that if Bitcoin crashes, they can margin call them and do that as well. But we've got way more transparency on that. So what is the issue with Silvergate at the moment in the final few minutes before we wrap up and move over to Twitter Spaces? Before I cover that, if you've enjoyed this video, please hit the like button. The more people that like it, the more YouTube will send more people, and it will get indexed in the algorithms. And also, if you want to stay up to date with all of these massively changing things, hit the subscribe button, hit the bell symbol, hit all, and YouTube will notify you each and every time we go live. I'm going to be heading over to Twitter shortly to take your questions. So if you'd like to ask me a question, then head over to @SimonDixonTwit on Twitter, and I'll be firing up a space in approximately 4 minutes from now. So the current situation is the exposure that they have, obviously, as more and more of us were pointing towards issues in exchanges. You tend to get two different types of investors. You get, for example, the Bitcoin OGs, the Bitcoin maxis. They tend to, the number of Bitcoins held on wallets that don't frequently change has increased as a result of that. But those that were investing for the dollars, the fiat thinkers, they need to sell the Bitcoin if it's gone wrong in order to meet their dollar expenses, because they don't do the bucket allocation that I talked about in my 2023 video that I did on New Year's Day. And so because of that, you tend to get them putting the money over to exchanges, selling them for dollars, and then withdrawing the dollars. And those that have not bothered to figure out self-custody yet, they go through a stress test. They take them into self-custody and they take them off the exchange, because you never should be storing, and more people are learning that you never should be storing your funds at exchanges. That has led to many of the exchanges having to have an exodus of withdrawal of dollars, as well as a withdrawal of their crypto. Many people converting their shitcoins into Bitcoin and then putting their Bitcoin into cold storage and finally getting out their Trezor wallets and hardware wallets. The net effect is that in Q4 of 2022, the deposits, the outflow from Silvergate Bank, which is the fiat gateway to many of these different ecosystems, went from $8.1 billion outflow. $8.1 billion outflowed from Silvergate Bank. And when they published those, it started to get a big correction in the price that leads to the market cap of Silvergate significantly being reduced. And so immediately they have to meet their capital requirements. And so they sold approximately 5.2 billion of debt securities, i.e. loans to Silvergate. But they had to do that. They had to sell those off and lock in a $708 million loss. So, $750 million they had to lock in as a loss, which obviously caused more distress, more panic. The stock markets in the traditional markets are obviously recovering from all the funny money that was pumped in, where companies were borrowing in order to buy back their own stocks, which created the bubble market. Quantitative easing, where the Federal Reserve was pumping money into the market. Those connected to the Fed were borrowing through these debt securities, pumping it into the stock market, creating an unrealistic, crazy bubble that we experienced. And on top of that, we got the FTX disclosures in their Chapter 11. So the FTX disclosures revealed in the Silvergate disclosures as well that FTX had $93 million of funds that were frozen, but obviously there was a massive exodus as well between that, because Silvergate was also servicing Alameda and FTX as well, and that led to a class action lawsuit at Silvergate for allowing those fraudulent transfers to occur, which will all come out obviously in the Chapter 11 cases. So all in all, a tsunami on the bank from the stock market, the traditional markets, the exodus of dollars at cryptocurrency exchanges, the exodus of those storing and exchanges, putting those into cold storage, and then some of the fraudulent companies like Celsius, like FTX, and all the contagion as they were fighting over client money and trying to own our money and spending our money and playing VC and hedge fund illegally. Total that all together, looking at the disclosures, the deposits at Silvergate declined from 11.9 billion to 3.8 billion. That's a lot of capital requirements that are needed in order to get through the next phase, which always reminds us that there is always a connection. And that is why Bitcoin is an exit from the traditional financial system. And Bitcoin at an exchange, as I've always said, is essentially a form of banking. And we even saw in the fraudulent case of FTX that they were creating synthetic Bitcoins that didn't exist. And then other companies were allowing those to be used as collateral with shitcoins as well, issuing loans. And then people like Celsius were spending our money in order to buy and invest and become VC and hedge fund that lead to losses without disclosing those securities, and the disaster that we've experienced between the contagion and a flushing out. And so now we have experienced some of the most reputable, some of the most public companies showing that even under all the regulations, you still have this contagion, but you get more transparency in that process so that we're able to cover it and really see some of that. So that is a big concern. We want Silvergate to get through this. They hopefully can manage their finances appropriately in order to get through this moment. But even as we have seen the big holes that I'm forecasting in digital currency group that they're trying to plug right now, we still have several more contagion events that we're going to try and get through. So Silvergate, I'm hoping, won't be the next domino to fall. I hope that they can get through this situation and recapitalize themselves and rebuild. But hopefully there is that core of deposits that can come from there. But my major concern is what happens when you start getting real estate corrections and then you get mass defaults as a result of interest rates going up in the traditional markets. That leads to an implosion. And remember, traditional fiat currency is a debt-based US dollar Ponzi scheme in the case of the US dollar banks, which is fractional reserve banks. It leads to money disappearing as people default on those loans. There's not enough money in the system to service the debt, so you have to come in and service it with a new supply. And it looks like this could be one of the accelerations to maybe using some of that technology to be one of those banks that can service. If you have systemic risks, then the FDIC insurance don't cover it. So then rather than bailouts, you probably get the issuance of the central bank digital currency. Maybe that technology that Facebook built can come in use as we move and to the next stage of probably monetary renegotiations as it become the contagion could go a little bit further. So we're starting to see some of that effect, but hopefully Silvergate can get through this. I'm going to head over to Twitter Spaces now and cover some of those other questions. Just a quick recap. Check out my YouTube video, my YouTube videos if you want to pick up. So firstly, the one that's essential viewing for all is the one on New Year's Day, how to make 2023 the best financial year for you, even though we are experiencing massive turmoil. And all the other videos, okay, so as I'll share in the screen share, I think there, this is one of the, I think some of the different videos, and also the GBTC, you can go deeper into digital currency group. Also, I released ones on our longer form content on investigating Binance and various other things. So you can see those there. So make sure you hit that subscribe button. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get hurt, others are going to do really well. Subscribe to this channel, hit the like symbol, hit the bell symbol, hit all, and then YouTube will notify you, and I'll keep going live to stay on this. If you would like to ask me a question right now, we've gone 5 minutes over, but I'm going to start on my Twitter space right now and cover your questions. I'll see you over there. Thank you.